points as we speak. So let me welcome on board Rudramurthy BV and find out what he's making of the chart patterns. Rudra, hi, morning. Great to have you on the show. Around the 25,700 mark, Rudra, for the Nifty futures, what is it that we're in store for today? What levels are you monitoring?
Good morning, Aisha, and thanks for having me in the show. See, the day when we saw that huge gap up, market has made a clear pattern of rising top, rising bottom, and we have already made a firm bottom. No doubt after a 800 to 1000 point of a gap up move, you are seeing some amount of time-wise consolidation and some amount of profit booking for last 2-3 days. But for me, after today's RBI policy, this market will still move on the upside. And I won't be surprised to see all-time high on Nifty coming back next week. So for me, this bullish view has a strong support which is now at around 25,550, and you have a gap formation at those levels. So till market stays above this 25,450 to 25,550, it is a buy on every dip, and I am looking at targets of 26,200 to come in the coming week. And when it comes to Bank Nifty, yes, similar patterns are visible. Strong support for this market is at 59,500 to 59,800. And yes, you have resistance at around 60,500. It's a just 1,000-point range I am giving on Bank Nifty, and all dips to levels closer to that 59,800 will be a buying opportunity. Keep a stop loss of 300 points from there, which is at 59,500, and look at targets of 60,500 and 61,000 to come. Relatively, Bank Nifty is more stronger compared to Nifty, and this is a buy on every dip market.
Right. Okay, Rudra, so what's looking good to trade this morning then? And would your bias be on the short side?
No, Aisha, I'm using the dip in this market to buy. And for me, two buy calls in this market will be one, DMart. DMart yesterday, after a clear rounding bottom formation, is taking strong support at levels closer to that 3,880, 3,900. So keeping a stop loss of 3,900, one can go long in DMart. Looking at targets of 4,000 to come on DMart, available even in futures, one can definitely go long in DMart. The second buy call for me is in private bank, that is IndusInd Bank. It has made a strong bottom at around 880, 900 levels, and now it is giving a cup and handle breakout. One can definitely look at buying IndusInd Bank. Initial target of 980 to 1,000, and one can have a stop loss of 900 for this long call. So a buy on DMart and IndusInd Bank.
To maybe a marginal beat, if I can call it. How are you viewing the stock on charts?
Harsh, definitely the stock has strong support at around 1,950 to 1,970 range. So a dip to those levels will be a buying opportunity, or even at current market price, the stock definitely looks strong on the chart. So one can definitely buy at current market price, accumulate more on dips to that 1,950 to 1,970 range. Yes, stock has all the legs to move towards its all-time high levels, which is at around 2,150. So at current market price and on dips, it's a buy. Keep a stop loss of 1,950 and look at targets of 2,150 to come on Bharti Airtel.
Okay, there you go. That's with regard to Airtel and what we can expect. You know, Sajit, you track LIC closely as well. Now, these numbers were really strong. In fact, I was reading the expectations. The expectations were soft from this quarter, given all the one-offs that have come into the life insurance space, including the likes of the fact that there's that GST impact which is coming in, not only on growth, but also on margins. The negative impact on margins, positive impact on growth, but not at all visible. The only possible negative that I saw from all of this is the fact that your non-par as a percentage of the total top line will now start to flatten. The kind of growth that we've seen, the hockey stick change in terms of the mix, that will not happen. But outside of that, the numbers look very, very good.
I think, you know, if you look at from LIC's point of view, and at the time when it listed 3 years back, it had guided for a VNB margin of more than 20%. Now in Q3, it has hit nearly 21.2% versus 19.4% on in the previous year there. But what was heartening is the kind of consistent growth in VNB, which is the value of new business, which is growing at a very healthy level, and the margins is going up to 21%. That also is one of the factors which we are seeing. While many of the brokerages are still give a lower valuation LIC compared to an HDFC Life or an ICICI Pru, they have consistently proved that they can push up the VNB margins to about 20%, which some of the private players are able to do that. That's one thing. The second thing is that, as you said, non-par business is now at a inflection point where it may plateau out. But I think they have another lever which they will come out with, which is the ULIPs, that will help them in some way. But interesting to know. I want to hear the management to understand that how they plan to take the non-par more, because they've been also talking about the fact that they want to increase the par business. There are certain gaps in the par business where they want to bring in some of the products there. So on an overall basis, we're going to see 18 to 20% kind of VNB margins for the full year for FY26, and next year maybe about 20% or so. But they are catching up very fast with the private players, and it's much ahead of their guidance what they had given at the time of IPO.
In fact, if you look at just the new business margins itself, that's improved to around 21%. Having said that, there's not a thumping buy from the street just yet on LIC. I was just going through the Bernstein note, and they've rated it as a market perform with a target price of 940. 940 thereabouts is the price that the stock did hit in its IPO year, which is about 3 years back. It was roughly around that mark itself. But let's welcome on board Chakri Lokpriya and find out what he's been doing in the market. Chakri, hi, good morning. Very action-packed week, to say the least. What is it that you've been doing? Any buy or sells?
Good morning. Thanks for having me. Yes, you're right. It's been an absolute action-packed week, budget, tariff, etc., all one after the other. I think, all this is clearly going to be a catalyst for companies' earnings to be revised up in the coming quarter or two, because, the big headwinds like the tariffs are kind of out of the way. So against that backdrop, I think, industrials which are kind of lagging behind, and, IT, with all this fall and confusion in the last couple of days, I think IT services are well placed because, they're not software companies, but they integrate various software together.
Chakri, how do you look at some of the defense stocks, HAL, especially after the management came out with some kind of clarification on the entire bidding process for AMCA? They claim that the entire bid was only for the prototype and not for the production of AMCA, and as and when the AMCA project goes ahead and goes for commercial production, they can still bid for the production there.
Yes, in fact, I think all the fears are kind of overblown. It is a market leader. It has tremendous moats, and those moats are not easy to replicate by any other company, whether it's private or otherwise. Now, against that process, given that its order book is intact, this scare aside, I think is a temporary one. It's clearly a buy on weakness.
Okay, a buy on weakness. That's the call coming in on HAL. In fact, we did speak after the reports that came out that suggested that it was knocked out from India's 5th generation stealth fighter program. We did just yesterday have a conversation with the HAL CMD, Mr. D.K. Sunil, and he clarified that there is no official communication as such on AMCA, and HAL is not out of the race for producing aircraft.
Let me at the outset make a disclaimer that HAL has not received anything in writing that we are out of the AMCA race. Notwithstanding that, just to look at this program itself, it is this particular order is for building 5 prototypes, which is the design and development phase, and subsequently the production will be after about 10 years. The production kicks in about 10 years from 2035 onwards. Now, if you see the RFI, it clearly states that this order is only for producing the 5 prototype aircraft. So it does not talk about the production at all. This is purely a prototyping order for 5 aircraft and certification. So the idea is that the partner or consortium that is selected will produce these 5 aircraft and help in the certification, and the production is a separate contract. So this is only for prototyping.
Okay, so that's with regard to HAL. Rudra, I wonder how you look at HAL on charts.
Around 4,180 to 4,200. So any bounce to those levels, I will definitely look at an exit opportunity for short term as a trader. However, BEL looks strong to me. So if someone wants to stay with defense, I will look at BEL as a better option than HAL. And BEL is taking strong support at those levels of around 410, 420 zone. So dips to those zone will be a buying opportunity in BEL. And HAL, I will definitely look at exit opportunity on any bounce to those support levels of 4180 to 4200, which is now acting as resistance.
When I discuss Tata Motors PV, considering the stock has been pretty active ever since its monthly sales data came out. Yes, it sold into Sunday's weakness post-budget, but then after it did recover. The December quarter for Tata Motors PV was weak, with the EBITDA down about almost 91%. Yet, marginally, it was better than what the street was anticipating. While Q4, of course, could be better for JLR, as that cyber attack impact also is going to normalize, which did sort of step it back a little bit. The India PV business, of course, is positioned relatively better versus JLR at this juncture. But Chakri, how are you reading into the prospects of Tata Motors PV, and does it seem to be attempting to play a catch-up with the likes of an M&M and Maruti and what they've done past year?
Yeah, I think the catch-up is going to take a bit longer. If against that backdrop, the Jaguar bit of the business has still some time to go for it to be contributing to the profitability and the revenues of the business. The Land Rover bit of the business is all right. As far as the local domestic production is concerned, I think they will continue to face various kinds of competitive headwinds. So, and that will turn out a negative to the margins. So against that backdrop, I'd still wait and watch and rather not get into the PV segment.
Harsh, if you look at the numbers which Tata Motors has provided, they're looking at FY26 industry growth of 8 to 9%, and in Q4 they're looking at the industry growth of 13 to 14%, when they will grow at 40% on that. And the bullishness is coming from the kind of Sierra and Harrier launches and the kind of order book they are sitting on. Roughly 2. So that's something which I know the numbers are, Q3 numbers are very subdued, primarily because of JLR cyber attack, for which they have taken around 800 crores of hit in the P&L. But it seems that they're sticking with the guidance of 0 to 2% EBIT margin for JLR for Q4 actually.
Right. Rudra, on the charts, how's Tata Motors PV looking?
See, for me, Aisha, support for this stock comes at around 350 zone. And yes, there is a hurdle at around 376. So it is just moving in that range of around 340 on the lower side and 375, 380 on the higher side. So let it break this 380 resistance, and then yes, a fresh move on the upside can be seen, or else it is just range bound buy closer to those lower range of 340 and again sell at those higher range of 380.
Okay, that's that on Tata Motors PV, but lots of other stocks as well to discuss, which we will continue after this very short break.
We have with us Rudra as well as Chakri still with us. Chakri, I wonder if you have a view with regard to some of the companies which have posted earnings. And we did speak briefly about an LIC. Talk to us about how you view the numbers. Also on Nykaa, the numbers were extremely solid. Actually, let's take Nykaa first. What's your take with regard to Nykaa's numbers?
Very strong, I think, reflects both the seasonal strength as well as the product strength of the company. they've been executing well, that is showing up in the margins most importantly. And because, the focus has lately been on whether they can sustain up the volumes with an improvement in margins. And so that is happening. So I think Nykaa is showing promise at the current levels.
And do you have a view with regard to a Bharti Airtel, Chakri?
Bharti Airtel numbers were kind of in line with expectations. The company is well positioned with the industry itself still in turmoil. Clearly for the whole industry, and Bharti included, some amount of gradual tariff increase over time will help. And that, I guess, is a gradual process. So I think the company is well positioned. It's now the only guy in town to buy in the telecom space.
Sajid, I know you track Mazagon quite closely as well, along with all of the other defense counters. This one will also be in focus. Just the uptake with regard to margins, it looked very strong to me. Even though you're looking at a YOY number, which was an elevated number of 26%. I'm not sure what to make of this, because you've seen a very sharp uptick versus estimates. Estimates were at around 20%. It's come in at 24%. Want to contextualize that?
Q3 numbers were primarily driven by delivery of frigates and destroyers in the quarter. But what they're talking about a decent jump in FY27, FY26. They've given a guidance of 26,000, or if I'm not wrong, that's a number that they've been talking about, or that's the kind of revenue they're going to do. But if you look at the margin part of it, Mazagon is guiding in the near to medium term of margins of nearly more than 15%. Currently, the margins are more than 20% there, and that's primarily because there are some orders which are low margin businesses for Mazagon going forward, and that's something which is. Which may be of some pressure going forward, but they have guided it made it very open that these projects, as and when they get executed, they will have a low margin business, and that would mean in the medium term their margins can come down below the 20% mark, but it should remain in the 18 to 20% mark. That's what the street is expecting there. But 23,700 crores of order book positions they have. That's a big one for them in that nearly 2 to 3 years of order book which they have, which is there. And if you look at from the company's point of view, many of these defense companies have books of 3 to 5 years, and like HL has a book of 7 years. So from an order and from the revenue point of view, there is better uncertainty there. But I think the street still believes that some of them are valued higher at the current price.
Right. Okay. That's the take right now on Hindustan Aeronautics. But Chakri, the one sector that I do want to talk about is IT. A big scare, almost a deep sea 2.0 kind of moment now with Anthropic. What would it spell for sentiment on IT, which is in any case fragile? Yes, it did make a comeback in the last quarter or so after that very oversold of a zone and completely neglected zone. But does that put this rebound on hold?
You're absolutely right. It is just like what the scare that happened last year, it's a scare again this year. If you look at the company's comments, all the company's comments when they reported earnings, the commentary shows a kind of an improving sentiment. Of course, at that point, the US tariff agreement was not done. Now it's done. So clearly that paves the way for a better, improved sentiment, at least for the order book, near-term order book for the next 1 or 2 years. Now, this whole scare is more longer term, but these are system integrators. In essence, they're not software developers. So in integrating software A to software B, IT services still plays a role. So I think therefore, one should buy into this weakness. Clearly, they are oversold stocks.
And what's your take, Rudra, with regard to this space?
See, for me, Harsh, IT is an avoid for short term. So let this move in IT, whatever you are seeing from the top, whether it is Infosys or even for that matter, Wipro, all these stocks are correcting. So I don't want to buy, or I don't want to catch a falling knife for a trade. So I will avoid IT as a space, let clarity come in and let strong support zone emerge. For example, see Infosys from levels of around 1,720, you have seen a straight line fall. and the fall has been very painful towards that levels closer to that 1500. A 200-point kind of a correction in Infosys in 3 trading session is definitely painful. So I don't want to catch this falling knife. Let it come, consolidate, create a chart pattern so that I just see that consolidation happening closer to those supports of around 1420, 1430. So I won't be surprised to see further down move in this IT pack. Any bounce you get for short term will be an opportunity to exit if you have, or unless you are a long term investor, then wait for those strong support at around 1420, 1430 to come, and those are levels where you can just look at buying Infosys for long term.
Okay, that's the take coming in on IT right now, but let's talk about some of the other newsmakers this morning, and Ishika is here with that list. Ishika?
So here are some of the stocks in spotlight right now. We have Federal Bank on a positive note. RBI has approved private equity firm Blackstone's acquisition of up to 9.99% stake in it. We also have Ultratech in focus on a positive note as well. It has commissioned a new 2.7 MTPA grinding capacity at its Aligarh unit, raising the unit's total capacity to 4 MTPA. We also have Arvind Smart Spaces. It has acquired a new residential high-rise project in Bangalore with an estimated top-line potential of 860 crores. We also have Song Distilleries, this time in a negative note. Its Bhopal manufacturing license has been suspended temporarily by the Madhya Pradesh Excise Department due to a 2012 legacy case. We also have Cipla in a negative news again. The GST Department of Maharashtra has initiated inspection as well as search proceedings at various company facilities in Maharashtra as of yesterday. And last but not the least, we have Ashiana Housing. It has acquired 8.83 acres in Raigad to develop a senior living project with 4.5 lakh square feet saleable area. Back to you.
Okay, thank you for that, Ishika. In terms of stocks to watch out for, you know, you also had some smaller names within the defense pack. Data Patterns, for example, which came out with numbers, again, very strong numbers. I'll just quickly read them out. 48% growth on the top line for Data Patterns, EBITDA up nearly 50%, margins continue to expand. 46.6% is now where the margins currently sit at. 31% PAT growth coming in at 58 crore. You know, so defense will very likely be in focus today. But the other space which will likely be in focus is metals. Let me also bring on board Amardev Singh, Senior Vice President of Research at Angel One. Amar, I wonder how you're seeing the setup with regard to metals, because you're seeing evident weakness, at least in the global marketplace where gold and silver are concerned. And what we've seen of late is we are seeing a disproportionate impact on some of the silver makers, for example, a Hindustan Zinc, as a result of the kind of cuts we're seeing in global markets in terms of pricing. You believe that that will likely impact some of these counters on charts? How is it looking?
Yeah, very good morning, and thank you for having me on the show. So see, what we've seen here is that there was definitely, you can say, a dream run in most of these counters, and Hindustan Zinc was no exception. Because from almost 400 levels, it rallied to as high as almost 740, 750 levels. So that correction has been, and that's been on the back of the sharp correction that we witnessed in silver, almost towards the 40% correction from its all-time highs. So clearly, it shows that whenever there is a correction of such a magnitude in any metal or in any company, it is rarely, or I would say it is the rarest of rare, that there would be a V-shaped recovery. So effectively, it means is that the prices would go in for consolidation, and as far as Hindustan Zinc is concerned, somewhere around because currently it's around 600, 610 odd levels. So it seems that it will now trade in a range between on the downside 550, on the upside 650, 660. So it's a 100-point range that the stock is likely to trade into, and reaching the all-time highs which this stock or most of the metal stocks have had recently, that definitely would require some fresh triggers in the market. So then only you will see some major upside. Otherwise, it could be in for consolidation for some of the metals, most of the metal companies at the current levels.
Rudra, is that your sense? IT and metals, are they looking like the weakest links right now in the market, given the volatility globally?
Definitely, yes, Aisha. I do agree both metals and IT is not a buy at current level, and I don't want to catch the falling knife and try to make a bottom nearby. So I feel every rise in this counter will again get sold into, and the recent highs what we have seen in metals may not come back soon. So for example, if you see both silver as well as gold, silver in MCX was there at around 4,20,000. Forget 4,20,000, even 3 lakh may not be visible in near term. So for me now it is time for consolidation, which will be seen both in metals and IT. But one has to keep in mind, yes, after this sharp correction, some amount of recovery, if it comes, will again get sold into, and we have to see some amount of time-wise consolidation and patterns where we will see at support these stocks trading and spending some time, then only one can confirm a bottom. So till then I will definitely avoid IT as well as metals.
Amar, how do you look at the earnings so far in Q3? Are they above expectations, or is pretty much in line?
See, I would say as far as the earnings are concerned, many of the earnings have been above expectations. So that is a positive. But overall, we've seen some earnings being in line with expectations. But it is definitely positive with regard to what we've been seeing for quite some time. So I would say that this current quarter is also going to be important, because what happens is that if there is a trend change, it would have to have sustained for at least a couple of quarters. And prior to this also, it was expected that the last couple of quarters of the current financial year would be where we could see a turnaround in terms of earnings. So that's the reason we've seen, and it's going to be more stock specific, because we've seen some of the stocks in certain sectors. Like for example, you look at the PSU banking space; they've performed exceedingly well. If you look at the auto space, they've performed exceedingly well. Most of the auto stocks have done exceedingly well. Apart from, if you look at, or on the other hand, you look at the IT space, or you look at the pharma space, they really haven't, most of them haven't performed that much. So it's going to be more specific, and also I would say some impact of the tariffs also. So that's going to be there.
Chakri, I wonder if you have a view on some of the, at least one of how one should look at maybe metals at this juncture. Would you try to play the trade at this point, given the kind of correction we've seen in some of the metal counters?
As both fellow panelists have mentioned, the trade has been so volatile, whether it is precious metals moving up 40%, down 40% in less than a month. While base metals, clearly they haven't moved with that kind of velocity, whether it is steel or aluminum. So there, if you look at those companies, the valuation of whether it's Tata Steel or Hindalco, they're trading at about 6-7 times CUA EBITDA. But with the trade deal, etc., you'll expect to see cyclical improvement. But I'd still wait and watch. But the fundamentals for the base metal companies, Tata Steel, Hindalco, even NMDC, are looking fairly strong.
And the other one that also came out with numbers was a JM Financial. A bit of a turnaround story that's playing out. Chakri, how do you view this one?
Yeah, like you said, the numbers were kind of in line. They are going to be impacted a little bit with some of the trading volumes that will maybe come down in the coming quarter or two. Valuations wise, it's not particularly a cheap stock. So I think I'll still wait and for the dust to settle a little bit down.
Right. Okay, wondering what's going to happen to some of the EMS plays. While off late, of course, they've been holding out well. We chatted with the Dixon management yesterday. But looking at Kane's performance, that's definitely, bound to take a stall back. It's been a weak Q3 by them. The results are below expectations on all counts pretty much. Amar, check in on the charts for Kane's for us.
So if I look at Kane's, it is more or less, I would say, trading flat in that sense. So if I look at the way it has, there was this sharp correction which has been there, but it seems to be overdone right now, because the stock is trying to form a base. Because if you look at, it's corrected almost, it's more than half from its all-time highs, which was in October of 2025 last year. Currently around 3,600 odd levels. seems to be forming a base, but the structure, if you look at the structure of the stock on the intermediate term, because that plays a major part, that really shows that it is likely to witness consolidation, and there could be a retest of the recent lows. So that's very clear on the charts. But yes, it seems that the worst might be over for the stock if it's able to sustain above the recent lows, and the recent low was 3,300, 3,350. So that's going to be very important to watch out for.
Okay. Chakri, great to have you on the show. We'll let you go on that note. Thanks as always for joining in. But yeah, lots of earnings that we're going to keep on our radar this morning.